Welcome back, traders, to another market recap video. We had a big day today. PPI hit and CPI is tomorrow. Oracle confused a lot of people, and the indices did exactly what we mapped out. I'm going to walk you through some of the levels we had marked off, where the money is rotating, and two patterns you can use immediately to stay out of trouble and find clean entries. Let's get to it. Real quick, guys, before we get into it, I'd appreciate it if you could leave a like on the video and consider subscribing if you get anything positive from these videos. It really helps me out. Thanks. Now let's get into this market recap video. If we jump over to the ES with throw in some fibs from the non-farm payroll numbers, you can see that today we popped on better than feared PPI prints. We tagged a level down here, tested, retested it, and then we finally cracked through it. When these micro ranges give way, they tend to hold. Notice how we drifted though? We didn't really collapse. This was just a seller's tape after the gap up, but not a trend break. If we jump over and take a look at SPY, pretty much the same thing. Obviously, futures are a little bit different, but they track each other. We had this 1 minute range off the open after the gap up from the PPI numbers. All we kind of did was bonk around. We tried to get out of it, made it out of it a little bit, came back down, tested the top of the 1 minute range, broke it, came down to the bottom of the 1 minute range, fought around, bonked, and then this afternoon we finally broke under, retested that 1 minute range, and then we just kind of faded all day. We didn't break yesterday's previous close, so I think it was just a seller's tape again here on SPY in the overall market. If we jump over here to market in out, I have this set to new highs and new lows. So what this does is it shows you charts of different indices, and it displays the daily difference between the number of stocks reaching the new 52-week highs and the number of stocks reaching the new 52-week lows. And I'll show you that down here under each chart for each indice. It's pretty helpful. A lot of people are asking themselves, why aren't we breaking out hard? Pretty much it's just rotation, sector to sector and within sector. That flattens out the headline indices, but the new highs and new lows are holding up. This is consolidation through rotation, not distribution. Now I want to show you guys what JP Morgan is expecting with the CPI info tomorrow. In red is the odds of the number coming in here. So there's a 5% chance that CPI is above 0.4, 25% chance that CPI is between 3.5 and 4, 35% chance that it's between 0.3 and 0.35. So you get the point. The red numbers are the odds of the CPI printing right here. And now what they go over is what their expected move from the SPX is. Now, this isn't always 100% accurate. Obviously, anything can happen, but they're usually pretty good with this. So they're saying if the CPI comes in over 0.4, the SPX is going to lose 1.5 to 2%. Now, there's only 5% chance that this happens, but you have it on your radar. If you want, go ahead and screenshot this so you can use it as a playbook tomorrow morning when the number comes out, because it's pretty helpful. 25% chance if it comes in between 0.35 0.4, then the SPX loses 0.5 to 1%. If we're 0.3 to 0.5, the SPX loses 25 basis points or it gains 50 basis points. 30% chance that would be between 0.25 and 0.3. SPX gains to 1 to 1.5%. And then 5% that we're below 0.25, the SPX is just ripping off to the races. We'll be live tomorrow morning in the community for the CPI print. So if you want to be a part of the community and get access to things like this live and in person and get our breakdown and see what we're trading with it, head over to asymmetricedge.org and get your name on the waitlist. The next round of invites will be going out later this month, so don't miss out. Now, a move that isn't making a lot of sense is the home builders. Home builders didn't lift on the soft PPI at all. Now, that's kind of odd. You'd think something that's as sensitive to rates as home builders would be lifting when we get soft PPIs. But it's the same thing with the KRE or the regional bank ETFs. So for me, this means opportunity if the CPI cooperates. Price held bodies undercut here, but we didn't break. Let's keep them on the sheet and keep your eyes on these names tomorrow when the CPI number comes out. Let's jump over here and take a look at Oracle and the edge that everyone missed out on. Oracle rallied into earnings. Then the algos saw the headline miss and they puked it. If you knew what to read, it was a gift. The street was modeling a 31% total cloud growth. Management talked infrastructure up 77% for the fiscal year. Now that's a beat. Sequential matters. Last quarter, infrastructure was 55% year over year versus the 31% folks anchored to. To average 77% for the year, sequential has to step up again. That's the opposite of what we're starting to see in data centers sequential growth at NVIDIA. NVIDIA still grows in absolute terms, but the quarter over quarter rate is decelerating. Oracle's infrastructure is accelerating. Think in phases: compute, then connectivity, then application. AVGO for the connective tissue, Oracle for the platform. As CapEx migrates, the market eventually re-weights the winners. The tape will tell you who to read. Once price reclaimed the prior close, the path was higher into the call. Also note the analyst tones on the call. When they're basically congratulating the team, you tend to see supportive notes come out the next day. We had a few levels marked out on the chart. This white bar here is just the day's open. We always like to keep an eye on that. This top VWAP is the day's anchored VWAP from the cash open. And then this one down here, if we zoom out a little bit, is the earnings VWAP. Now these are big levels because it tells you where everyone's at from back here. It's very important. Zoom in a little bit. You can see we tested the day's VWAP, tried to bounce off of it, tested it again, broke under it, retested, broke, came back up just for a little liquidity grab up here from the market makers. And then we broke the VWAP with confirmation and we just dropped. But you can see we dropped back down here, and where did we fight? The anchored VWAP from the earnings. Now, if you didn't have these marked off, you would think, oh, it's just battling at some random area for no reason. But no, we knew that it was battling here because we had the VWAP from the earnings there. Gonna jump over here and take a look at AEO, American Eagle, because we're seeing a couple patterns that you guys can start using tomorrow. We're seeing a lot of this right now. Earnings gap ups right here, or catalyst bars. It'll base out above it, come back down and retest this breakout zone, then continuation. AEO showed a textbook rising 3 setup right here. Up, 1, 2, 3, up. Rising 3 isn't about the size of the move, it's about the direction probability. Rising 3s are very strong. Anytime you get a big green bar, 1, 2, 3 down, and a big green bar up, the probability of this continuing is very high. Respect the breakout bar low. As long as price lives inside this bar, you give it room. We jump over here, take a look at IREN, get the same kind of pattern we're playing out. We had the good earnings back here, the gap up, basing right here around the breakout zone. Price comes back down and retests the breakout level. It holds, and then we're just off to the races on big volume as well. So we're seeing a lot of big earnings breakouts, and then price will consolidate for a few days and base out. And if it holds this breakout zone, once it breaks the top of this earnings candle, the price has been off to the races. I got asked about a couple names today. I was asked about Hood, and I was also asked about SoFi. Both of them made new highs and then faded, as you can see here on SoFi and here on Hood. So that tells you a lot may already be priced into tomorrow. Let CPI reset that. Let's take a look at the oil charts here. I like to look at oil going into the CPI. It's a quick little macro hack. You plot your monthly VWAPs on crude and compare against where the month settled. So I go up here, I'll take my VWAP, find August 1st. I'll place it. And you can tell, or what this shows you is where oil closed is about the average price for August, because this is taking all of the data and giving you a line of where the price is. So we closed right at the average price for August. When crude and gas finish above their monthly average, the odds of a hotter CPI are increased. Right now, it's closer to average than it is hot. The volume profiles pointing control lines up with that read. It's pretty simple, but it's really effective. If we go back and find July, do it for July 1, there it is, and the end of July, so right here. As you can see, the end of the month, the average price is down here, and oil closed up here. And as you guys know, the CPI for July came in really hot. So again, it's something simple, but it works. Don't complicate things. Come back over to SPY and just talk a little bit about game plan and risk going into tomorrow. In this CPI, I'm keeping my position sizing honest, marking the fibs from the non-farm payrolls and letting rotation do the heavy lifting. If we print in the 0.25 to 0.35 core bucket, I'll be looking for the continuation into the breakout retest setups, and I want Oracle adjacent names where sequential growth is still rising. If CPI is hot, I fade into the first bounce and let those gap memory levels do the work. I just want to show you guys this little screenshot from inside of the community today. We were really focused on Oracle. We had our VWAPs and different levels mapped out, and we were doing it all live. As you can see, it's all time stamped. We're looking at the Klarna IPO as well. This is just a little peek at a tiny percentage of the things that you get if you want to join the community. There's tons of stuff to learn. There's tons of education in here, and we're always live. We're here all day, every day, perfecting our game, making trades, making call outs, keeping an eye on everything. So head on over to asymmetricedge.org, sign up for the waitlist because the next round of invites will be going out at the end of this month. Also, if you want this kind of stuff mapped out live, the CPI, the PPIs, all the different data sets, we get a lot of cool research over there, and we're always live for these prints. We run the CPI buckets in real time, mark the first 15 minutes of impulse, and call out the different levels on NQ, ES, and the different leaders. Check out the link in the description, and I'll see you guys tomorrow.